Hey guys, welcome back to the channel. In this video, I will be going over my top 3 stock picks for the month of February 2021. I'm a big fan of researching companies and investing into stocks. It's one of the best ways to build wealth. Look, every family has somebody who breaks the chain of poverty, and I hope you will be that person, if you haven't done so yet, of course. Over the past month, I've done research into hundreds of companies, and these are the stocks that I believe are the best ones to buy now. Be sure to watch the entire video to not miss any important information, since I will be covering key metrics, company news, and growth outlook for each of my picks. Lots of time and research went into this video, so I would highly appreciate if you guys can give this video an early thumbs up. Let's get started up. The first stock on my list is Regeneron Pharmaceuticals, ticker symbol REGN. This is a biotechnology company that inverts life-transforming medicines for people with serious diseases. They have developed 8 FDA-approved drugs, and among their treatments is a combination of antibody regimens for patients with mild to moderate cases of COVID-19. Regeneron is trading around $500 per share. This company was trading at a 52-week low of $328.12 and reached a 52-week high of $664.64. Last year, Regeneron had huge growth coming into 2020, where the stock price absolutely exploded. Over the past few months, Regeneron has been in a downtrend after it reached a peak in July 2020. This company has a market cap of $53.76 billion with a price to earnings ratio of 18.47, making it one of the more affordable stocks trading in these market conditions. And currently, the company is not paying a dividend yield. In terms of their profitability, they have done quite well. They currently have a profit margin of 34.14%, along with a nice return on equity of 30.6%. Looking at this company's balance sheet, they have over $3 billion in cash with an awesome quick ratio of 3.89. This means the company has 3.89 times as many assets as their current liabilities, putting the company in a very strong financial position. Analysts currently have Regeneron rated as a buy right now, along with an average price target being $661.44, which is over 30% higher than what the stock is currently trading for. We all know that cases have been surging in the US and Europe, and previously the US government had made an agreement to purchase 300,000 doses of Regeneron's antibody to be delivered by the end of February 2021. However, on January 12th, they extended the agreement to purchase an additional 1.25 million doses by June 30th. Regeneron also recently launched 2 treatments: immunology drug Dupixent and cancer drug Libtayo. Dupixent's global sales jumped 69% year over year to over $1 billion, along with Libtayo also reporting $97 million in revenue in the third quarter. These 2 pharmaceutical drugs should continue the company's growth in the coming years. And some other things to look out for that could increase Regeneron's share price in 2021 is that these are going to be FDA decisions on whether or not to approve Libtayo as a treatment for non-small cell lung cancer and a type of skin cancer called basal central carcinoma. The FDA decisions on these are due by the end of this month on February 28th and March 3rd. If these 2 medicines get FDA approval, which I think they will, this will definitely help increase the value of this company. This is why I believe Regeneron Pharmaceuticals is a company that you should keep an eye on and consider adding to your investment portfolio. Next up, for the second stock on my list, we have Opendoor, ticker symbol OPEN. Opendoor is a real estate company that is based in San Francisco. Opendoor allows people to sell their homes and then they will flip it to make money. Currently, Opendoor is trading at $28.25 per share. This company was trading at a 52-week low of $10.55 and reached a 52-week high of $32.39. Looking at how the stock has moved over the past year, it has been extremely volatile, but it is just trading below its all-time highs. Opendoor has a market cap of $15.38 billion. The company has no price to earnings ratio or EPS since since they have not been profitable. Opendoor has a profit margin of negative 8.1%, and the company also has a very good amount of cash, sitting on around $551 million with a very nice ratio of 5.16. There isn't tons of information to go off of, but as of now, this company is currently rated as a buy, with having an average price target of $32.50 per share, which is higher than what the stock is currently trading for. Opendoor recently had a SPAC merger approved on December 17th, which means that this is a very new stock that is trading just under its all-time highs. In 2019, the company had revenues of $4.7 billion, and in 2020, these numbers decreased mostly due to the pandemic. Obviously, this company has not been profitable yet. They are a very new company, but I'm sure as the economy starts to pick back up, they will continue to increase revenue. Opendoor's website allows them to be accurate on home appraisals, to know exactly how much a home is worth, and to be able to maximize profits from that property. Opendoor is also a much more affordable stock compared to some of its other internet real estate competitors like Zillow and Redfin. With Opendoor implementing technology and e-commerce into their business model, this will definitely help them outperform some of their competitors. This is still a small company, so there will surely be some risk involved in the short term, but over the long term, I believe that this company will perform extremely well in terms of their profitability and their share price. This is why Opendoor is definitely a company that you should consider taking a look into. And finally, for the last stock on my list, we have Roku, ticker symbol ROKU. This company manufactures a variety of digital media players for video streaming. Roku also has an advertising business and licenses its hardware and software to other companies. Roku is trading for $432.68 per share. The stock was trading at a 52-week low of $58.22 and reached a 52-week high of $448.17. Basically, this stock is trading just around its all-time highs. Over the past year, this stock has had tremendous growth. Ever since its yearly lows back in March 2020, this stock has absolutely skyrocketed. Roku currently has a market cap of $54.92 billion with no current price to earnings ratio, and they pay no dividend. Looking at the company's financials, they have a profit margin of negative 6.53%, which means Roku has not been profitable yet. In terms of the balance sheet, they are sitting on just over $1 billion in cash with an awesome ratio of 3.29. Analysts also have Roku rated as a buy right now, along with having an average price target of around $320 per share, which is lower than its current share price of $432.68. Roku has seen big demand for its hardware, support streaming, Roku channel, and operating systems for smart TVs. Roku stock has also kept up with demand. The stock has gained more than 200% in the last 12 months. Consumers have been switching from traditional cable for greater flexibility in picking the content they want, as well as to save money. This ongoing trend can help expand the content library on Roku's platform as well. There were more than 51.2 million active accounts in the end of 2020 and 58.7 billion streaming hours viewed on the platform last year. In the third quarter, Roku's revenues were up 73% year over year to $452 million. It consistently improved its average revenue per user throughout 2020 despite issues with the pandemic. Roku is in a great position in the fast evolving streaming space. They have diversified revenue streams, and with the company improving margins, I think we can expect Roku to produce some nice returns throughout 2021. That's gonna wrap it up for today's video. Make sure to do your own research when looking for stocks to invest in. I am not a financial advisor. Just use this video for entertainment purposes only and as a guideline for your own research. Make sure to hit that like button and hit that subscribe button to see more videos like this in the future. I hope you guys enjoyed today's video, and I'll see you in the next one. Peace.